Welcome from me, Guy Monson, to our regular 6-minute strategy. I spent much of last week in a snowy Washington trying to get a real feeling of life in the engine room of President Trump's MAGA revolution. Thanks to our political consultants, Signum Global Advisors, we began with a day in the Senate building. There we met with 12 congressmen and senators, 10 Republican and 2 Democrat, with each speaking for about 15 minutes, followed by Q&A. One message was immediately clear. The Republican speakers were unwavering in their commitment to the president and to his agenda, with seemingly no limit on what this might require. Trump, it appeared to me at least, has the absolute loyalty of his troops. I went on from there to see academics, House staff on the Committee for Appropriations, right at the heart of the DOGE moves to restrict funding, and other political commentators. My key conclusion, though, was clear. Trump 2.0 is more decisive, more aggressive, and even more transactional than Trump 1.0. So yes, if you think today's White House proposals are full of shock and awe, you'll probably get ready this time around for many more of them to actually get done. So let's look at some slides. Perhaps the most obvious display of loyalty from Trump's Senate members came last week in the approval of 2 of his most controversial picks. Tulsi Gabbard was confirmed as Director of National Intelligence on a 52-48 vote, only from the Republicans Mitch McConnell, 82 standing out against her. And even more controversially, Robert F. Kennedy Jr.'s confirmation as Health and Human Services Secretary went through by a similar margin, really controversial with his anti-vaccine views. In other words, there doesn't really seem to be any desire to stand up to the president by Republican members, even on some of his most controversial decisions. You can see that similar message flowing through other issues that the president is leading on in terms of policy. Tariffs, even more aggressive than anything we saw in his previous term. Just this morning, we had a tweet out on another 25% tariff on autos, farmers and semiconductors, on top of a whole wave of programs he's already announced, in particular reciprocal tariffs, which seem to be on the table for almost all America's trading partners. How do other countries respond? Well, if these tariffs are going to be this volatile, if he's going to keep coming back asking for more, then perhaps it could be argued that the logical strategy is a tariff threat in return and an escalation and possible risk of a worldwide trade war. In tax cuts, he's equally aggressive. He's tabled $1.5 trillion, yes, of spending cuts, but $4.5 trillion in tax cuts as a starting gambit. It includes increased spending for border and defence at around $300 billion. In our view, a government shutdown on March 14th seems to be quite likely. And of course, Elon Musk is working in the background on all of this, targeting a reduction of 250,000 employees as his DOGE program gets into action. Trump says he'd like to do more than that. He'd like to see the federal workforce fall by 25%, or somewhere around 500,000 underlying people. Agencies will be dramatically reduced, and yet there isn't much evidence of any pushback from members of his Republican Party. So on the next slide, you can see why Trump perhaps feels he needs to move so aggressively and so speedily. In that left-hand panel, you can see the continued rise of the Chinese trade surplus, almost $1 trillion, climbing ever since they joined the World Trade Organization back in 2001. The problem is that this is supposed to come at the expense of the US, and you can see that ballooning US deficit, nearly $900 billion. And you see on the right-hand panel, we've looked at this before, Trump feels he has the tools to retaliate. If you take Mexico, for example, their exports to the US represent about 30% of Mexico's GDP. US exports to Mexico represent less than 1% of GDP. In other words, there's a huge asymmetry in favor of the US. I think Trump will make very, very good use of this. On the next slide, you can see in a rather crude way why there's this strong deregulatory agenda, and why, particularly assisted by Elon Musk, they want to close down or radically modify many US agencies. It's a crude measure, but if you look at total pages published in the Code of Federal Regulations in the US, which, if you like, runs the US economy and business, it's gone from the 20s, 30s, 1,000 pages back in the 70s and 80s to nearly 200,000 today. And I think it's this regulatory mission creep which Trump and Musk are so keen to rein in. So how are markets reacting? Well, for the most part, they're positive. Since the US election there, you can see in the left-hand panel, the US equities up 7%. US growth equities, that's the big tech stocks, still rising up nearly 11%. Dollar up 3%, and bonds broadly flat. Extraordinary too on the right-hand panel is volatility. You'd expect that to rise with policy uncertainty from the White House. In fact, the reverse has happened. Equity market volatility there in blue has declined steadily down to about 14.8 today, and a big fall in bond market volatility. One other interesting thing to note, though, is that foreign markets are also responding well. Chinese equities are actually now outperforming US equities since the election, with European equities close behind them. I think that calls to the fact that one of Trump's other abilities, whether you like it or not, is his action on conflicts. And I think particularly for Europe, the possibility of an end of some form or other to the Ukraine conflict, you may not like the way we're getting there, would be very positive for business sentiment across Europe and the export industry out there in China. So what are we doing? Well, for the moment, we're remaining overweight equity and risk assets because the benefits of deregulation, in our view, and diplomacy outweigh the risks of tariffs and open-ended tax cuts. We will, though, remain nimble in the face of an increasingly radical White House that's ready to do what it says, as I saw so clearly in Washington last week. Thank you.